What's up, everyone? It's Scotty with MoneyVest. So I am traveling once again. So there is going to be a little bit of a change of scenery and backgrounds here. I've got a massive bookshelf here on this Airbnb. So I'm planning to actually read a lot over the course of next week and a half that I'm going to be here. So hope you all enjoy this video. It's going to be a complete market update. Markets continue to kind of drift a little bit higher and slowly and steadily. We're kind of approaching all-time highs here once again. So we're going to break down everything you need to know as the markets try to recoup the record levels. And of course, we continue to trade at an all-time high. Semiconductors did pull back a little bit. Apple did rally a little bit higher. Amazon, Tesla, Enphase popped over 14% after the earnings. So we got lots to discuss here in this video. As always, make sure that you drop a like and don't forget to subscribe to the channel. If you're just joining us for the first time, and link to our Discord and Patreon is going to be down below. If you're interested in joining and of course getting access to all the members only private videos, accessing all the Discord channels, the trade alerts, trade ideas, everything's going to be included as well. And thank you so much for 77,000 subscribers. I really appreciate all of you. And again, do access the Discord, join the Patreon. Link's going to be down below. You can access all the spreadsheets, members only private videos, and all the Discord channels. And do connect with me on Instagram as well. My handle is going to be CASWRP. So S&P 500 closes near session highs as Wall Street attempts to recoup record levels, and the market is trying to make heads and tails out of Powell's statement. And of course, Palantir also surging over 31% on the back of very strong beats on earnings and revenue, and finally turning the corner towards profitability really well. And again, we discussed that in our previous video. And this right here is the CEO, Ladenburg Thalmann Asset Management here, Philip Belancato. Very interesting name. And he says, and I quote, "We're on the precipice of some real volatility in the marketplace, and the last 2 days are very indicative of what's to come here for at least the next 6 to 8 weeks," is what he's talking about. And this right here is how the markets perform. So again, Tesla pushing higher a little bit over 2%, Meta pulling back, Amazon pulling back, Google slightly higher, Semiconductors slightly lower, Apple pushing up, Microsoft basically flat on the day, and a little bit of momentum kind of coming out of tech, out of semis more specifically, and going towards healthcare, real estate, energy, materials. We've got auto manufacturers, financials, all these other parts of the market. In the last 1 day, of course, we've got all sectors pushing higher. Technology was the only sector slightly down. In the last 1 week, we've got a little bit of a split market with healthcare, consumer cyclicals, industrial, defensive, all pushing higher, with financial, materials, real estate, utilities, energy pulling back. In the last 1 month, we got technology, comm services, industrials, healthcare, cyclicals, all pushing up, with energy, materials, real estate, and utilities pulling back again. So a little bit of a split market here, with live cattle, orange juice, and feeder cattle all pushing higher. With platinum prices, we got corn, soybean, lean hog, soybean oil, palladium, everything selling off. With Bitcoin here a little bit under 43,000, and Ether just over 2,300 as well. So volatility, of course, as we already know, continues to stay down, continues to be muted, and we've just been seeing slowly and steadily, it's been kind of creeping up a little bit, but not really pushing past this 15 level, which continues to be a very strong area of resistance, I should say, for volatility. So we're not able to break out of 15 here for a very long time. We've gotten up to like 14.5, 14.9, 14.8, but we're not able to successfully break out past 15, which is, again, quite interesting as VIX continues to be subdued. And as I've mentioned before in my previous videos, that this right here, when the VIX gets up to highs of, let's say, 36 or 40 or even as high as 20, these can be pretty good buy signals here for the market. So this is actually, in my opinion, pretty solid buy signals. But just because the volatility is low does not mean that it is actually a sell signal or a signal to start shorting the market or start looking at buying puts. You can start hedging, you can start selling covered calls, you can start hedging, you can start de-risking a little bit depending on your allocations for specific stocks, and you can start rebalancing a little bit. But this does not necessarily mean that you're going to start shorting heavily just because the volatility is low, because the VIX can stay longer down there longer than it can stay higher. We know that when the VIX gets high, it's time to buy, because for me, it's a no-brainer. VIX doesn't stay high for a very long time. It gets up to like, 40, 50, 60 levels in very worst case scenarios, rare occasions. It gets up to 70, 80. That's your cue to start dollar cost averaging heavily. Keep your cash on the sidelines until that moment and start deploying. You have to be a net buyer, in my opinion, at that time. But as soon as it starts crushing back down, we know what's going to happen with the market. It's going to start that recovery back up. But just because the volatility is low doesn't mean the opposite, right? And it kind of applies more towards investors. Investors need to understand that just because the VIX is low, it doesn't mean that it's time to start shorting or start buying puts and start selling. But for traders, it's a much better estimate, much better gauge to kind of understand market risk assessment, volatility, implied volatility, risk reward, all that stuff. So it's something that I need to kind of clarify because traders, investors, they both have different types of strategies that they need to employ. But right now, volatility is still a little bit over 13. We're going to keep a close eye, and we're going to continue to watch and monitor how the VIX does. Now, crude oil prices recovering back up a little bit over 61 basis points in the green, just a little bit under $74 a barrel right now. Resistance back up to $80, $81. So that right there is going to be that resistance level to watch for crude oil prices. Support level is going to stay put right here, $71, $72 per barrel for crude. And it's kind of bouncing off of that support really, really well at the moment. Now, when it comes to the treasuries, right, we're looking at the bond market. The 10-year yield is back over 4.1%. So that, again, is a little bit of a recovery back up. And we are still seeing that spread between 10 and 2-year negative 30 basis points. The moment this starts to turn back positive, that means we are once again seeing the uninversion takes place, because right now the spread is negative, meaning the yield curves are inverted. But the uninversion takes place once we are on the way back up in that positive territory. That's basically a good functioning bond market long term as well. Next, resistance and target is going to be 1.6.5%. That's pretty much the level that we started off as, and back in March of 21. This is pretty much the decline that we looked at of over, I think, 30-40%, actually a little bit over 160%, because it actually went into the negative territory as well. So keep in mind, because this is more of a technical indicator. Right now, the economy continues to be super strong, and that's actually one of the reasons why investors are so optimistic, is that there is no signs of weakness, right? Everything looks to be super positive, super great, super strong. We got unemployment that's really low at 3.7%. Even Jerome Powell kind of cited in surprise that the unemployment report continues to shock us on the upside, and we've got economic growth that's coming in very strongly. So if inflation continues to trend down, which is exactly what the Federal Reserve wants to see, that's a good sign. That's exactly why there's optimism around rate cuts. Rate cuts, market's pricing in 6. The Federal Reserve's told us 3. The timing of those rate cuts and the amount of those rate cuts are still a big question mark, because there's still a discrepancy between what the Federal Reserve is telling us and what the market is pricing in. So that is going to continue to be the topic of discussion over the course of 2024. When exactly is the Federal Reserve going to start cutting rates, and how many rate cuts are going to happen? Nobody has the answer to those questions. Market's obviously pricing in 6. The Federal Reserve told us 3 in the middle of the year of 2024. Now, going over to the markets individually, S&P 500 continues to trade almost at an all-time high, 49.54. Support level is going to stay put down to 4,800. Down to some of these levels had around 46.75, 46.48, 46.50 here, around those levels. It's going to be very, very important support levels. And of course, we are continuing to see that validation from that 21 EMA as the RSI continues to trade a little bit more on the overextended side. But markets are doing what they do best, and that is to say that they are continuing to drift higher and higher, slowly and steadily. Even if you do see a bit of a pullback, it gets bought up fairly quickly. Same thing with the NASDAQ. Still has a little bit of ways to go, so NASDAQ hasn't really reached that all-time high yet, and it's kind of approaching its resistance once again at 15,600. So this right here is going to be that level, and of course a breakout beyond that is going to be 16,190, 16,200 levels. Support level is going to stay put inside this green rectangle over here for crude oil at just a little bit over 15,000 points as well. Now going over to Apple, starting with Apple pushing higher, pre-market up over 22 basis points, resistance back up to 189, close to $190. And if it does end up breaking out even further, we're going to be watching 198, close to $200 per share next for Apple even further. And of course, support level is going to stay put down to $180 per share. For the company, it's bouncing off of that same exact support level where we originally bought into the stock at close to $180, kind of in line with that 200 simple moving average. So again, if it breaks out over 190, it's possible that it approaches that $200 mark once again moving forward. I'm long Apple, and I like Apple for the long term as well. I would be buying more and dollar cost averaging a lot more in the 160s if and when it actually gets down there. Amazon, on the other hand, kind of hanging up really well. So I'm actually quite surprised to see that there's not a lot of profit taking. I shouldn't jinx it, but at the same time, 170, 169, 168 is kind of holding up really well. It's got a little bit of a gap to eventually fill. So this right here is going to be the gap that Amazon may or may not come down to and sort of like fill into this gap here. Support level is going to stay put down to $154, $155. Resistance and targets back up to 176, 177 for Amazon moving forward. Tesla, on the other hand, here also pushing higher, up a little bit over 2.2% on yesterday. And of course, we are seeing a little bit of that momentum carry forward. After hours, up almost 1% pre-market right now, and this is going to be a big resistance to watch for Tesla. As we already discussed, 180s, is going to be a huge support, and that's exactly where we are. Very, very oversold, incredibly oversold, in fact. And if it does see that momentum back up, we're going to be looking at these resistances kind of in line with that 21 EMA. So the 200s, 203, 204, $205 in and around those levels, very, very important level of resistance to watch for Tesla, but still very much within the context of this downtrend right now. Talking about NVIDIA and AMD, a little bit of profit taking. Seems like finally people are starting to realize how crazy this is starting to get. So NVIDIA here pulling back a little bit over 1.6%, pre-market also lower, extremely overbought. I would be very, very careful, very cautious with this stock here, along with Advanced Micro Devices. They both seem to be extremely overbought, overextended here, although AMD already starting to show signs of that weakness. MACD's crossing below that signal line, so it already did drop a little bit over 3.5%. But of course, NVIDIA here is on a whole different world, whole different universe that it's trading at a $1.7 trillion market cap, which is absolutely ridiculous for such a short period of time. And again, support level is going to stay put inside this green rectangles over here for NVIDIA moving forward. Talking about PayPal, and PayPal, big day for PayPal here. Earnings are coming up. I already did a video yesterday, so make sure that you do check that out. $1.36 in earnings per share with just under $8 billion in revenue expectations. It does seem like I could actually feel it, a gut check, that it could rally after hours, after the earnings are reported. Resistance is going to be all the way up to $67, $68. So that, of course, is going to be that level to watch. And beyond that, we're watching $77, $78 per share for PayPal as well. And of course, support level is going to be staying put in the low 50s for PayPal. So lots of consolidation sideways, lots of trading action in this range for PayPal. And again, resistance is going to stay put at $67, $68 per share for PayPal. Talking about Visa, and Visa here continues to move higher to new all-time high. Again, support level is going to stay put inside this green rectangle, and we were seeing a lot of consolidation sideways with, of course, the new all-time high for Visa as well. So not really much to go over other than the fact that Visa is an excellent company. I'm going to be breaking down their earnings more specifically in a dedicated video very soon, but this, of course, is going to be that support level inside this green rectangle along with that 200 simple moving average also to watch for Visa. Meta Platforms, a little bit of a pullback, starting to already see some weakness and some profit taking after hitting a new all-time high on earnings at over $480 per share, over 450% recovery and rally here for Meta. And this right here is the gap that it may or may not fill in eventually. Support level is going to stay down to $384 with a very, very overextended, overbought RSI at the moment for Meta as well. So you got to be super careful, super safe with these types of companies and stocks that are momentum trading is very, very high with lots of sentiment that's driving the stock prices higher. And of course, there's a lot of greed that's kind of involved with the RSI MACD so overextended on the price action at the moment as well. Talking about Netflix, and Netflix here also starting to roll over a little bit after hitting that resistance at close to 575 after the earnings. This right here is going to be the gap that it needs to sort of fill in eventually. Support level is going to stay put down to sub $500 level for Netflix moving forward. We're seeing the RSI, we're seeing the MACD also starting to come down a little bit, and next support is going to be down to $450, also aligned with those moving averages for Netflix. And talking about Google, and Google here also seeing that momentum back up. It did drop on earnings, but I do think that was a little bit of an overreaction. But at the same time, I do believe that Google, considering its earnings expectations, is not quite undervalued per se. I would be a lot more interested in the low 100s, sub 100s possibly. You never know. But in the meantime, kind of holding tight, sitting tight here. Support level is going to stay put in the 140s. Resistance and target back up to $150 per share for Google. Microsoft, lots of consolidations, not really much to go over other than the fact that it's just trading sideways in that range. Support level is going to stay put down to $384, down to $366 per share for Microsoft here. And then finally, if you come over to Costco, you'll notice that Costco here continues to trade at an all-time high. It's done incredibly well. Very, very massive move to the upside. RSI also a little bit on the overbought side with over 70 at the moment. And it does seem to be forming a little bit of that rising wedge, which I'm not super comfortable about. It could lead to a potential breakdown here fairly soon, in my opinion, for Costco. And last but not least, the winner on the day so far, we'll see if there's any profit taking intraday, but Enphase up almost 14% with a very nice breakout, potentially to the upside above that 21 EMA at close to $107, $110 per share. And of course, next target's going to be up to 120 to as much as $131 per share for Enphase. So hope you all enjoyed this video, and a very quick update on the entire markets. Do connect with me on Instagram, and do check out the links down below for our Patreon. The first week of the month is the best time to join. There's still a couple more spots left if you're interested in taking advantage of all the benefits, including members-only private videos, full access to our spreadsheets, including watch list, fair values, and the Discord access with over 20 plus channels also available, including trade alerts and buy and sell alerts and options alerts as well, and trade ideas as well. So links are going to be down below. Happy investing, and I'll see you all in the next video.